Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, March the 3rd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Some economic data that we've had out today in the form of PMI, which is Purchasing Managers Index. Italian Services Purchasing Managers Index came in higher than expected. French Final Services PMI came in slightly lower than expected, and that one was below 50, which means contraction. German Final Services PMI came in right in line with expectations at 55.3. And Great Britain Services PMI came in slightly lower than expected, but still above 50, showing expansion at 52.7, expected 55. And here in the United States, we've had a couple of unemployment numbers, not the big number that we should see tomorrow for the Friday unenjoyment, as we used to call it on the floor. But anyway, unemployment claims came in at 278,000, higher than expected 271,000. And we also had Final Services PMI, our Purchasing Managers Agreement or Index, here at 49.7, below the 50 and below what was expected at 49.8. So just slightly. So it's pretty much in line. We also have ISM coming out here pretty shortly for the Institute for Supply Management, which is more widely looked at than those other PMI numbers. So Institute for Supply Management, came in at 53. This is the non-manufacturing, so service side 53.4 versus 53.2, and factory orders came in a lot lower than expected at 1.6 versus 2.1, so not very good. We also had natural gas storages come in line with expectations at negative 48 billion cubic feet. All right, so it was expected negative 49 billion cubic feet, so right in line with expectations there. Onto the markets. Let me pull this one out of the way. We got crude oil pushing up, testing this 35 area. That's what I said. If it settles up in the 35s, I'm going to be looking to maybe get long some of this crude oil because I think it could easily go to 38 to 40 right in that area. So that's something to keep an eye on. If that starts looking like it's going to settle above 35, I'm going to probably step into the water there. Onto the NASDAQ. We're looking at it just slightly in negative territory. As you can see, we're down about 12, 13 points right now. Overall market's just kind of slumping. All the economic data today was not really that appealing. But having said that, it's going to start looking like bad news is good news, because if we have bad news, that means the Fed's not going to raise rates, and the economic slowdown will probably boost the overall equities, which is the mantra, because easy money might be down the road. As you can see here, the mini S&Ps on a daily chart, 15-minute breakdown, getting ready to go into positive territory, just down one on the day, and pushing up against this value area. So came down and tested yesterday's point of control right there. I was looking to step in it, but got sidetracked on some of my other trades and kind of missed that opportunity when it started to settle above that point of control. Onto some trades that I've done. All right, so in Apple, let's go back to Apple real quick, because Apple's a trade that I put on just to add some long deltas. There's very low implied volatility percent, as you can see there, so it's not really in line with doing a credit spread. So I just took it as I'm going to throw some money at this one just to get some long deltas, and as Apple is very heavily weighted in most of these indices and stuff like that. It's one of the highest correlated to the overall market. So I was looking at this one, and generally speaking, it has kind of broken down from that a little bit lately, but I would expect that to revert back to the mean. So I wanted to add some long deltas, and with very low implied volatility, I didn't want to risk a lot of downside because I still believe this overall market may have a pullback. So in that, if I were to sell some puts in there for the upside, I didn't want to be, hurt on the downside with the rest of my market, or rest of my portfolio, I should say, being short. So add some long deltas in this with very limited risk. I decided to go with some calls, and I did the April 110 calls. I paid 37 cents for that, so that was a debit for that. So I bought out of the money calls, thinking that if we kind of push up higher, then it could easily test the 110 area, which is right there at the 200-day moving average. So anything upwards on that, then that will be profitable for me. And as you can see, since I put this on yesterday, it is a little bit better today. On to XOM, Exxon Mobil, ticker symbol XOM. As you guys know, I put on this iron condor in the webinar a couple of weeks ago, and a lot of these shorter duration iron condors are coming right in right now. I'm either being tested on one, which is the one that I talked about yesterday, and today I took off two of the other March ones. So this one, XOM, Exxon Mobil, I took off because, as you can see, it hasn't gone anywhere. It stayed right in line for the past couple of weeks, right inside of where our strikes were. So that, allowed that theta to come out. We also got the volatility contraction that we were looking for, which is great. Both of those things, sideways market, volatility contraction, that's how you write it up. That's how you want it to come about. And I had on the March 77, 78, 86.5, 88.5 iron condor. And what that is a defined risk strategy. So I have a call spread and a put spread. I'm short the 86.5 calls. I'm short the 78 calls. I'm then long the 88.5 calls to define my risk to the upside, and I am long the 77 calls to define my risk to the downside. Well, it stayed right in there, right in between my two strikes, and we just watched that theta come out of there, and the volatility helped that theta come out really quick. I originally sold that for 26 cents and was able to buy that back for 15 cents. Not quite 50% the width of my strikes, which would be 30 cents generally speaking, but I was looking at it like I didn't get this in at the best prices, so I wanted to still cover that for what I would assume would be 50% if I got 30. So it was, a rather quick turnaround, and decided to take that one off. On to Walmart. Walmart's another one. I have two on in Walmart, two iron condors, one in March, one in April. The one in March came in. So I had on the March 61, 62, 68, 69 iron butterfly. And, the 62 puts that I'm short, I defined that risk by buying the 61s, and the 68 calls that I'm short, I defined that risk by buying the 69s. And as you can see, it's been pretty nicely sideways for all intents and purposes for the 2 weeks that we've had that on. We got almost tested on the upside. I thought I was going to get tested here, but it did not. It opened up above, but then sold down. So it tested my 68s. It did not test my break-even point on that. And I'm going to talk about that tomorrow's webinar on how to defend this. It was very close to me having to defend this, but probabilities played out, came back down. We got the volatility contraction that we were looking for in this strategy, and I had originally sold it for 30 cents, bought it back for 15 cents, 50% of my max profit that I talked about in that iron condor webinar that I was looking for. Now, we did defend one of the 3 March iron condors, so it's pretty close to in line with the probabilities playing out, and I had to defend that one. So that all kind of worked out why I put on a lot of these different occurrences in order to have one or two of them test me so that I would have something to talk about tomorrow on the webinar as to how to defend those. So that's going to be a really important one. If you want to learn how to defend iron condors, defend iron butterflies, go to protraderstrategies.com, sign up for that. And if you haven't seen the iron condor or the iron butterfly, how I like to build those out, so it kind of sets up for a way to defend, then go check out those first and watch those and get ready for tomorrow's webinar on defending the iron condor. That's all I got for you guys today. If you can't take that, take it easy.